The past few years, this housing market has been absolutely insane. Sky-high prices, bidding wars, and roller coaster mortgage rates. Is the real estate market crashing? Will anyone ever be able to afford a home? You're about to meet three powerhouse realtors in the craziest markets to break it all down. Representing the Golden State, California, Agent Jeb Smith. For the Lone Star State, Texas, Agent Levi Lassick. And we can't forget the Sunshine State, Florida, Agent Melanie Atkinson.
We have all been working in this crazy real estate market for the last 2.5 years. And I thought it'd be really helpful for viewers to get an idea of what it was like in our respective markets, what it was like for the last couple of years, and what it's like now. We are going to talk history. We're going to talk current market conditions, the housing bubble, what we're telling our buyers and sellers right now. So thank you guys so much for joining me. We'll get started with Levi. Levi's in the Dallas, Texas area. Why don't we start with just giving us a quick rundown of what it was like for the last couple years in the Dallas market?
Absolute pandemonium. That's what it was. We're in one of the highest relocation cities in the country. Corporations, it's not just people and families, it's corporations that are moving here at a rapid rate. And we have not really seen, there's been a little bit of slowdown now, but over the last 2 years, we battled against, 30 offers on average on a home. And now for us, we work with a lot of relocation, of course, and being on YouTube, we attract a lot of people coming from California, New York, Illinois, Washington State. And so, they were making those moves in vast numbers. On top of that, as I mentioned, corporations were moving entire companies here, bringing thousands of employees at some times. And so it was extremely competitive. And so it really came down to working with the right team. Luckily for us, we've got some of the best agents in the Dallas area, and we're able to negotiate those deals. And despite all of that, we were, still very successful in winning our clients' homes. We didn't have really hardly any clients that went past 2 offers on a home. And usually the first time we missed out was they wanted to play a little hardball, and we, that wasn't something we recommended. But at the time, we had to work with them the best we could. But ultimately, we survived that, working with a lot of buyers in a very hot seller's market. Now that we've seen a shift, now it's a lot easier to find those deals, and so, but the market is still good. We're still seeing if homes are priced correctly, 3 to 5 or 8 offers still on a house, so not in the 20 and 30 range, but it's still very competitive. But we do see sellers willing to work with the buyers a little bit more now. And ultimately, it really does come down to, working with a good team, I believe. And so we always want to keep our clients' interest in mind, and we make sure that they don't overpay. I do believe there is a difference in the last 2 years of overbidding versus overpaying. So even if they were overbidding, we wanted to make sure that the house was priced accordingly. The comps would support it. We didn't want them to pay over, even if there was they submitted an appraisal gap or appraisal waiver. None of our clients had to actually pay out of pocket for that. And so if you look at the deal the right way, even in those times, I do believe, you make your money when you buy, and you make your best opportunity on the buy side. And so if you can buy correctly in any market, it's definitely can be more challenging in certain markets, as we've seen in the last 2 years. But ultimately, if you understand the comps and the homes and where the market is moving to, then we were still able to assist clients during that time. And now it's definitely lightened up a little bit, and it's been, we're positioned, I think, very well to help them move into this to this new market we're working with now.
Well, perfect. Your market sounds very similar to what we were dealing with in the Tampa area. So let's go to the West Coast. And Jeb Smith, how is the market out there in the LA area?
Ditto. Literally, like you and Levi have said, it was crazy, right? So we started, I think it's always nice to know where you were at the beginning of the year prior to the craziness. So if we go back to the beginning of 2020, I was on video. In fact, I recently posted a video where I was talking about the market at that time. And I was talking in that video, we started off the year pretty hot. We've got a low supply, buyer demand is picking up. And then the pandemic happened, right? And so what happened with the pandemic is interest rates obviously moved lower. People were able to work from home, just all of the craziness that we already know. But that created this craziness with regards to demand. You mentioned crazy housing market earlier. That is what it was in every sense of the word. I mean, things were I've been in the business almost 20 years, and there were things that I hadn't seen that were happening daily. Every time I thought I was surprised, the next deal, I was even more surprised with the things that people were willing to do. And so with that, we saw homes, sell very quickly over the asking price, multiple offers, a lot of the things you've heard. Since then, probably the last 4 to 5 months, the market slowed down. We're not seeing the month over month appreciation, a lot like, some of the numbers are reflecting out there on with regards to data. But we are still seeing things sell. I mean, like Levi mentioned, clients going into escrow still today. I have listings that were sitting for, a lot longer than any listing I've had sit in 2 years, but still sold at a price above where I thought it would honestly sell in this market. I've had buyers. I haven't been as fortunate as Levi mentioned, and I've had some clients make 10 offers over the last year that are still looking for property, that are still today getting outbid on property with homes selling above the asking price, with only a couple of days on market. So, contrary to what a lot of people believe, no one in California is giving away their home. People still, the prices are sticky to the upside, right? So I believe that as a seller has an idea of what their home is worth, they've seen what their neighbor's home is worth, even though that equity isn't real equity until it's sold, that's a number that people have in their heads. And oftentimes they're not willing to just walk away from that number unless they absolutely have to do something. And because there's equity in people's properties, they have super low rates. It's going to cost them much more to buy a house now than it, did a year, 2 years ago. People are staying put. So we're not really seeing, more of a moderation right now than anything else.
Yeah, I want to go back to one of the first things that you just said, Jeb, because I was doing the research. And at the beginning of 2020, I did an episode as well for my channel about what I thought the market was going to be like for 2020. And one of the things that I said was that the inventory was low. So I went back and looked at what the inventory was for March of 2020 in the Tampa Bay MLS area. And we actually had 47,267 listings, which was 3 months of inventory. And that felt low to me at the time. So fast forward to March of 2021, we had 16,000 listings. So we saw a 65% drop in the number of active listings year over year from 2020 to 2021. And then 2022 was even lower. It was at 14,000, just under 14,700. So as we all saw in our respective markets, the inventory was so low that everyone had to make multiple offers. And I have a question for both of you. Whenever we were in the peak of the craziness, what was the most that you ever wrote an offer over list price?
$250,000.
Okay.
Ooh. All right. I don't feel so bad now. 120,000.
So mine was about what Levi's was. I think mine was 120 to 125,000. California, you guys have a little bit higher prices than we do.
I do have a quick question for Jeb, if I may.
Sure.
I was just curious, because being in Dallas, of course, we saw quite a bit of influx coming from California. However, we knew the California market was just as hot, and clearly you're going way over what we were going over. So what do you count, Jeb? What was happening in California whenever we feel like there's a mass exodus, but the real estate market is still just as hot there and people are moving around? Were you seeing people move into your area, or were they moving around, or were they just selling because they were gaining so much equity and just kind of moving up or moving sideways? What was kind of the main cause of that?
No, great question. All the above. I'll say this, that, I'm not sure if you're aware of this, Levi, we send the most people to the state of Texas. California does, but Texas also sends the most people to California. And so that, the National Association of Realtors has this little thing on their website where you can put in your state and it shows the migration patterns. So we have, not just as many people coming back, but we have a lot of people coming back to California. So when you look at the net migration numbers, a lot of people just point out the gross migration numbers or of people leaving California when they talk about the exodus, but they don't talk about the people coming into the state, right? Because it's not just all these people leaving and no one coming in. There's still a good amount of people coming, whether they just wanted to live in California, maybe a job relocation, like you mentioned earlier, or what have you. So that's a part of it, right? We have people that want to be here. But I will say a good portion of it is people moving around. So Orange County, where I'm located, 3.3 million people. At the bottom of the market, and I will say the bottom, meaning December of 2021, with regards to inventory, we had 964 listings on the market here in Orange County. 3.3 million people, we had 964 listings on the market. So you imagine there's people that have always lived here that have never owned a home. So some of those people bought homes. You had people moving from out of state into Orange County, buying up property. But you also had a lot of people in higher cost areas. Now, when you talk Orange County, you're talking a high price point to start with, right? The median home price where I am is over $1 million. But when you look at areas like the Bay Area, where their median home price or whatever is 1.5, 1.8, or you go to, the tech area up there, San Jose, prices are, close to $2 million. Well, what happens is as they can migrate, they can move outside of their respective areas. They don't need to drive into work every day. Guess what? They look at my market as affordable. And so now they're coming here making cash offers, making offers $250,000 above the asking price and not batting an eye, because that's what they were doing in their market and not going anywhere. So we had a lot of state migration in itself. But overall, I mean, there's, the weather, right? I mean, we have our problems here in California. Don't get me wrong. We could go on. There's a laundry list of them, but there's also some really cool things about California that draws people in.
Orange County is my dream place, and my grandparents are actually from there. My grandma lived, one of them in Costa Mesa, the other one in Santa Ana. My parents grew up in Huntington Beach, and then they moved to this podunk country town in Texas where I grew up, and we would go back and visit every summer. And I was like, wait, why did you move? Why did you leave paradise for the cows and the rodeo? I didn't get it, but I love Orange County. It's amazing.
We have always traded residents with Texas here in Tampa, a lot of Houston, Dallas. But the amount of buyers that we had from California over the last 2 years was shocking, especially on the west coast of Florida. It was almost like Californians didn't even know the west coast of Florida existed. So when they all started coming here, you talked about how much money they had from moving in other parts of the state. Well, when they were coming to Tampa, they had even more buying power here in the Tampa Bay area. And I'm assuming the same is true in the Dallas area. It was shocking for locals and even people from around other parts of the country, how much money the Californians had when they came into our states.
Yeah. And I feel like that's another reason that even though, house prices were continuing to rise in some of these markets, a really good example, because I know the market a little bit better than I know Tampa, is say Phoenix, Arizona market, right? Mm-hmm. So Phoenix, as prices continued to increase, all the locals were there going, it's a bubble. There's no way this can sustain, because who's buying these properties? Who can continue to buy them? Well, guess what? Californians can, because Californians, they can, you got people coming from the Northwest, Seattle, or like people that are in much higher cost areas than the states they're moving. They can afford to do some of this quote unquote craziness stuff. But, nevertheless, I think we're all seeing kind of a slowdown, and I'm sure we're going to talk about
that. Right. Levi, do you know off the top of your head what kind of your average price is in your area right now?
Yeah, I mean, it depends on county. I mean, we do a lot of business in Collin County, which is just north of Dallas. And that's where a majority of the suburbs where people are moving to. So the median home price there right now is right at $535,000. And we still saw an increase from July. So the numbers just came out for July of 2022 compared to July of 2021. It was still up 18%. 18.9% actually.
Yeah, so my stats are average sales price, not median, and we're up 18% of average sales price in the Tampa Bay area, but we were actually down 3% from June to July. Our peak of our sales volume was in May of 2022, where we sold 8.4 billion in my MLS area, which is a pretty big area in the central western part of Florida. But since then, even though June prices technically went up a little bit, they weren't that much. So let's talk about current market conditions. That was a little bit the Tampa Bay area. We are now seeing an increase of inventory. We have about 2 months of inventory now, which feels like we're flush with houses. What are you guys seeing there as far as available inventory?
We're sitting at about 2 months, maybe 2.5 months. But I mean, I think to give it relative terms, right? I said at the beginning of the year, we started out like 964. I checked the MLS earlier today. We were at just over 4,040 homes. And what I've noticed more so than anything else, before I go into that, this year or last year about this time, we had obviously less homes on the market. I forget what it was, 2,600 homes on the market during this time last year. But prior to the pandemic, 2017 to 2019, right, that quote unquote normal time in the market, we had about 6,700 homes on the market during this time of year. So we're significantly below that, but we are above last year. Now, with that being said, we did see some increases in inventory. We would see about 100 properties come on the market in Orange County a day or a week rather, on like a net, if you will, right? So some properties would go into escrow, but more properties would come on. So I would, every week on my live stream, we talk about where the inventory is here locally, just to give people some, a basis, if you will. And so week over week, we were adding about 100 homes for the better part of 2 months. Well, the last 3 to 4 weeks, we're going to be sitting at essentially the same number over the last 4 weeks. So our inventory, yes, there's new homes coming on the market, but it's not growing, right? Because demand is still eating away at some of those properties. The overpriced ones are still sitting, but overall, I think we might be pretty close to the peak in what we're going to see in inventory this year, because we're starting to get some of that natural seasonality back to the market. Kids just went back to school for some markets yesterday. My kids don't go back for another month. So I think by the time my kids go back to school in about a month is the peak will have happened by then, in my opinion, which means, you just kind of coast through the end of the year with, depending on what happens with rates.
Yeah, seasonality is a big thing in my market too, which I'm assuming it is in Levi's. We'll talk about that next. What about inventory in your market, Levi?
Yeah, we're the same. We're right around 2.3 months of inventory on the market.
So whenever we see these headlines that say, inventory has doubled and things like that, I'm sure it drives you guys crazy too, that just because inventory technically has doubled from 1% or 1 month to 2 months, that doesn't necessarily mean that we're sitting in a market with all of these houses that no one wants to buy. And that part is very frustrating whenever I'm watching either news or YouTube or whatever.
That's the same with interest rates, right? Whenever they went from 3 to 4%, everyone was saying it's 1,000% increase or whatever the numbers are. And they're like, the market's going to crash and it's like, guys, 4% is still, of course, right now we're close right back to 5%. I bought my current home in 2019 at 5%. And that was a great deal. At that time, everyone was like, 5%, these rates are amazing. And I was the same way, didn't bat an eye, thought 5%, that was amazing. But I refinanced in the middle of last year at 2.25. So that was pretty cool, but still 5% even in 2019 was not a big deal. And now that we're right back there, I think we're going to get through this next week or two, because we have everyone going back to school right now, finishing up the family vacations, getting the kids back. So it's a naturally slow time, I think, just in general for the real estate market. But again, Dallas is a market in a whole. Again, being one of the top relocation markets, they're projecting now Dallas to grow bigger than Chicago Metro within the next 6 to 7 years because of the relocation, because of the space, because of the opportunity here as well. And that's something we just passed up Houston, which Houston used to be the fourth the fourth largest metro. Dallas just passed up Houston, which is pretty phenomenal. And the fact that they're projecting now to pass up Chicago, now will be behind LA and New York. as the large, and that's the thing is Dallas is not landlocked. It's not waterlocked. There's no mountains around here. There's no beach, which is another reason why I love, Orange County so much. So we can just keep growing. I mean, we can grow all the way to Oklahoma. And that's something not only for, we're seeing the tech companies, we're seeing corporations, not just the tech companies, but all kinds of businesses move here, and they continually build out. And so I think as long as Texas in general right now too being business friendly, tax friendly, freedom friendly, that is also attracting a lot of companies here as well. And so as what we're seeing, we're seeing that little bit of a slowdown, but ultimately we're still projected for a tremendous amount of growth here in the Dallas area.
Florida and Texas are similar in a lot of ways, but you guys do seem to be able to attract those tech companies a lot easier than we do here in Florida. I'm not sure if it's just geographically we're too far east or the land or whatever. Just really quick, as far as Florida, the Tampa market, which by the way, if you like beaches, then you should come to our beaches because they're even more beautiful.
I do like the Gulf side of Florida.
Yes, we get the sunsets. Well, so do you in California. But seasonality in my market is a big thing. August and September are always slow. Well, not last year and the year before because of what was going on, but our schools start very early. And then we have the peak of hurricane season, which you guys deal with in Texas as well in September. So it does seem to be a very slow time for real estate in general. So for anyone who's watching, who's getting all of your real estate statistics from these 2 months, it's not necessarily representative of every month of the year. And then in the Tampa Bay area, we have 2 different markets. We have a second home market that tends to be a little bit more active in the winter time, so January through April. And then we have more of the traditional school suburb market, which is, March through July, because our schools start in early August. So there's really not a lot of times in this area where we're not busy, but this is definitely one of those times.
No, good stuff. I mean, I think here in California, seasonality always plays a part. But like you, we have warm weather pretty much year round. We don't see in Orange County temperatures much below 50 degrees, and typically don't see temperatures much above 90, depending on where you are in Orange County. If you're in coastal area like me, it's pretty, the climate's great year round. But we don't necessarily have the second home market as much as you do. It's just a lot of traditional buyers and sellers and investors just looking for property. But we do see a slowdown after school starts and people start to get into the holiday spirit and they don't want to deal with buying a house, between I think probably mid to late October through mid-January, right? People start dealing with taxes. And then after all that stuff kind of works its way out, it's when we start to see our market pick up, which is around that first or 2 weeks of February. And that's been missing, if you will, for the last 2 years, just because of how crazy things were. But I've started already seeing some seasonality start to play back in. And so it'll be an interesting, position, if you will, by where we are in a couple of months, because, there was a lot of people predicting the inventory would continue to rise through the rest of the year. And I don't see it. I've been wrong before on different things, but I think the inventory thing's going to level off.
Yeah. I mean, so here's my question with inventory is, people in the Tampa Bay area don't really seem to have any huge motivation to move. One, the prices are high if they've lived here a long time. If they move, their taxes go up. The interest rates are higher than most people have. So just from our local residents who already own properties, nobody really wants to move. So what would cause an increase in inventory other than, some corporate buyer putting a bunch of houses on the market or, people having to sell for some other reason, which we'll talk about. But I mean, in your markets, are there any good reasons for people to want to move right now?
I mean, if they have to, right? I mean, it's like I'm looking for example, right? Me, I've given this example in different conversations I've had, but I'm looking at buying property right now. Why? I've got 3 kids. I've got 3 boys in a, just under 2,000 square foot property. My wife, I mean, obviously she's there too. So there's 5 of us in this property. And granted, these are first world problems. This is not a problem, but would I like to have more space? Would I like to be able to give the kids, a bigger yard and all of this stuff? Sure, I would. And I'm in a position to do that. And so there's people like me where it's the right time of their life to move. And so you've got those people that will move because of that. And so I'm not here. I'll be the first to tell you, like, I'm not trying to pick the top or the bottom in the market because I don't care. And people say, well, Jeb, you're just saying that. I really don't. I mean, I plan on being in that house another 10, 15 years. It's not my forever house, but it's a house that is going to get me that transition through, now, but by, kids go to college and probably, maybe they're out, maybe they're not. And then I'll move on at that point. So I'm not looking at what the value is tomorrow. I'm looking at the payment. What is the payment? Can I afford to do it? Do I, am I in a good position with my work and my career and all of that stuff? And I am. And so that is the reason that I make decisions. And I think that's where, like you kind of mentioned a moment ago, people sitting on super low payments and going, why do I need to do anything? And if you don't, that's why I think you see inventory peak to some extent, because there's a lot of people out there that aren't going to move and have that rate locked in and that payment locked in, and they're just going to stay put.
Yeah. I mean, for us, I just think we're just such an attractive relocation market that we just had Caterpillar move corporate offices here. That was well over 1,000 employees. We just had Goldman Sachs, move part of their corporation here, over 5,000 jobs. And just in there, you hear Elon Musk, right? Tesla. I mean, that's more in the Austin area, but just in the Dallas area, we're having corporations come here with thousands of people. Actually, our operations manager now, we just got her from Utah because her partner moved here with Goldman Sachs. So that's continually happening as well when you bring in that influx. Now, clearly, they're not bringing all 5,000 people with them, but it's also creating a pretty strong job economy here in Dallas, which is one of the top in the country right now. So as far as that goes, we have a strong economy and all the other factors that are playing in. I mean, this is just such an attractive place, especially with freedom friendly, as I mentioned before, tax friendly. I know our governor is courting corporations as well. So maybe that's the difference between Florida. Although I think we have similar governors in Florida, but I know that the Texas governor is reaching out to corporations and pitching them on moving to Texas. So he's trying to bring in more business, more companies. Now, if that may come with tax incentives, I haven't heard as far as if they're offering tax incentives, but if they offer the Corporations Act, clearly it's a big move. But based on some of the taxes in some of the other states, it's already a tax benefit to move here on top of that. And again, we've got the space. You mentioned hurricanes, though, not a factor for us in Dallas as well. So that we don't see much seasonality there. Last year, now again, this was last year, November was our biggest month for our personal team. I mean, we had the big, and that kind of surprised me, especially when you think about a week of Thanksgiving. But we had people coming in the day after Thanksgiving. We had, I think, 5 different families in that weekend, and they were probably taking advantage of the fact that they had the time off. December was our second or third biggest month of the year for our team last year. So we had a really strong fourth quarter, and the weather, it is not a big factor for us. Actually, it cools off in September, and we have perfect weather pretty much from September to December. So that could that probably helps out with bringing in some more people there as well. So it's just all signs are looking good in the Dallas area still, with just a overall friendly environment for everything. And so it's just we're still getting calls each day. So
how are you guys creating inventory there? Do you have a lot of new construction?
Oh yeah, clearly new construction is a big deal here in Dallas. I believe it's the number 1 new construction market in the country right now. And again, because there's so much room to grow out. If you look at Dallas on a map, all you see around it is green space, and again, you can go all the way up to Oklahoma and like Texas Instruments, which is a pretty big Texas corporation. They just built a new $20 billion facility up in Sherman, which is like right between Dallas and Oklahoma. So that's going to start spurring, that's thousands of jobs there too. That's going to start spurring growth, to connect the dots basically from here to Oklahoma. So yes, new construction, it's all moving north to the east and to the southeast, and there's plenty of room to grow there.
So I have a question here real quick, if you don't mind.
Yeah.
So I hear a lot about new construction, right? New construction, now builders are offering incentives. They're just dropping their prices. They're just giving homes away, right? So I'd love to hear both of you's take on that. But one thing I wanted to say that you just said, which I thought was interesting, Levi, is, Dallas, the city of Dallas produces or builds more homes than the entire state of California does. They did last year. They built more homes in Dallas than the entire state of California built because of the regulatory fees to break ground here in California. It cost about $90,000 to break ground on a single family home because of all the measures and hoops you have to jump through with governing agencies and all that stuff. So just think that's interesting. But yeah, so I'd love to know what you guys are seeing with new construction. Is it really? I mean, I understand the market is moving sideways, but is it? Are price reductions as crazy as they're making it sound?
Yeah, I think exactly. That's whenever I talk about business friendly environment, that's what I mean is that there's not near, especially what I hear from like yourself and from the families. I mean, we have discussions with Californians every day, Washington State people as well. And so that they incentivize. And so, now we're seeing what we didn't see 6 months ago. Builders are definitely reaching out, they're answering the phone again and they're saying, hey, realtor bonus here and a bonus here and a bonus there. Absolutely happy to help. And so, yes, it's definitely been easier to lock up those deals and get some incentives for the clients as well.
Yeah, we could probably talk about new construction all day, Levi and I, because it's a big part of our market here in Tampa as well. And I will say it was a big part of what we sold. It has been extremely challenging just to get those houses actually built with the supply chain issues and the labor issues that we've had to deal with. So I'd be curious to know if it's the same thing in the Dallas area. A lot of my new construction clients are in the position now where when they went under contract, late last year or early this year, they were looking at interest rates that were super low. And now they're looking at interest rates that are much higher. So what they thought was going to be their payment is in fact going to be much more because of the time that it's taking to build the houses. As far as incentives, what I've seen more than anything is just builders offering money towards closing costs to buy down the interest rates. Not a huge amount, 12, 14,000. As far as agents are concerned, there are many stories in Florida how builders just pretty much ignored us and didn't want us to work with them. Little did they know that we were actually really helping them by being a middleman and keeping our clients happy during the delays and things like that. But they're all paying us now. And yes, there are some incentives coming out. So
interesting. Yeah. I mean, we don't have so much of that here in Southern California where I am, right? Because coastal area where they're building, it's further out in Orange County, not really my market really. But yeah, I mean, we had the same thing, builders reducing commissions, not working with clients. And then all of a sudden, I mean, I've commented about this several times. We've been through this before. And if you remember the last time, it was the exact same thing. They didn't want anything to do with us until things changed. And all of a sudden they need us back. And so, yeah, I think you're seeing more of that. I mean, I like the idea of these builders giving incentives to buy down rates. It's smart to keep the deals in contract. I look at the new construction numbers, right? They come out and they look crazy because you see the amount of homes that are outstanding out there. But once you start really looking at them, only a small percentage of those homes are actually built. And a large majority of them are under construction. Then you have some where they pulled permits. So the permits pulled, those homes aren't going to get built. Probably not. I mean, unless they're in a Dallas market where they really know the market. Those homes that are under, that are under construction are the ones that, I ask you guys, are those, some of these builders, I think my guess would be a large majority of those are probably under contract. They were built with a purchase contract in mind when they built those properties. They're not just spec builds. Now, some of them are going to result in a spec build just because people back out or what have you. But I think a large majority of those are probably accounted for. Is that fair?
Oh yeah. Oh, for sure. Yeah. And we're not, the clients that we have under contract, same thing. And now that rates are back down to 5%, is that worse than 3.5% or 4%? Yeah, but it's not too terrible. And so even unless somebody closed in the last 2 months, again, all they got to do is get through the next 4 months and then possibly look at a refinance opportunity, or they bought it down, and so which is what, if they work with our lending team, they're definitely encouraging that, but some of the builders are too. But yeah, the inventory was so non-existent with new construction. Pretty much everything we're building. I mean, there was communities that sold out 2 years in advance, and they just that was it, So, and they weren't planning to do that. They were only planning to release a couple of phases because the demand was so high. They put those deals under contract, and so it really comes down to whenever they're going to close. And now that the projected closings that we have coming up in the next month or two, none of our buyers are necessarily concerned right now, because they do have the incentive or the opportunity still to buy down the rate and still be at 4.5%, not that bad.
So Jeb, one thing I wanted to say based on what you just said was, I don't see a lot of new construction clients cancel contracts, partly because the builders required a lot of money down that they can't get back. So most people aren't going to walk away from 10% down unless there was something that happened to the housing market where prices were so much lower. So most of my new construction buyers, they're happy, they're excited, they want their houses, but they are very frustrated because it's taken a really long time. I have some that are 15 months along that don't have drywall yet. Now that's not every builder. We have a lot of production builders here that crank out houses pretty quick, but it is definitely some of the smaller, more customized builders are taking a really long time. So those buyers are very frustrated still.
Yeah, rightfully so.
Well, let's talk about the hot button topic, which is the housing bubble. I know that we all have very similar views as to, the housing bubble itself. We all work on the ground floor every day. I think real estate agents get a bad rap for, always talking about how the market's good and how everything's fine. But I think the public and everybody really needs to listen to us, because we actually really do see when things start shifting the day it happens. So wanted to talk about, realistically, housing bubble thoughts. We all know that it's not 2008. The same fundamentals that caused that are not what's in our market now. So if we want to dig in a little bit with what we think might actually be a problem with the housing market in the future.
I mean, I'll jump in there. I see prices. I mean, just rehashing everything you said. I mean, not to go into it again. I'm not going to go there. But I think with all of that you just said, I think prices move sideways. I think a big part of it has to do with interest rates. I personally believe that there's an opportunity for rates to go lower, depending on what happens in the economy. And what the Fed actually does. But I think there's an opportunity in the next 12 months for rates to be in the mid fours again, for well-qualified buyers out there for an extended period of time, not just a one-off like we saw last week where rates dropped. But with that said, I think, if rates can go lower, home prices will probably see small gains, 1-2% year over year for a number of years, in my opinion, in my market. Real estate's local, so depending on where you are, it might not do that. If you have a housing market, because there are housing markets out there that haven't seen appreciation in 20 years, right? Because they're just one of those markets. And, maybe they've seen it over the last 2 years, but prior to that, they didn't see any appreciation. Where California, we're 4.5% appreciation year over year for 65 years. Now, some of that was 10% appreciation. Some of it was down 2 or 3% appreciation, but averaging out. So I think if rates go lower, there's an opportunity for home prices to continue to rise a little bit. If what I believe is actually the case, where rates probably trade in a range for a period of time, I think home prices probably move sideways. You're buying a house, you're not really getting the appreciation. It's not really going down. Maybe your neighbor's house sells for a little bit less. Maybe it sells for a little bit more. Hard to say, just depending on things. But, I think it's important at the moment to just have that longer term time horizon, 10 years. I mean, if you look back, biggest crash in history from 2008 to 2014, 15, 16, many markets were back to that price that at the height of 2008 within 8 to 10 years. So by having that longer term time horizon, we're not anywhere close to where we were at that time with the fundamentals in the market. So yeah, maybe you see some declines, but I think overall strong markets, Dallas, Tampa, some of these big, nicer markets where people want to move are probably less affected. It's more normal. And I think that's what I try to get across to people is it's normalizing. We have very short memories, in anything and everything we do. We just remember what happened, the last couple of times versus going back and really looking. And partly you and I were talking earlier on camera here about videos that we filmed years ago, right? And so I went back and looked at some of these videos and go, what was I saying during this time? And guess what? I was saying, I watched a video from 2014 yesterday. It was awful to watch. It was like it was terrible. Like I was watching, I go, oh my, like this is awful. But what I was saying in that video still rings true today. And that was 8 years ago. I was talking about seasonality in the markets. I was talking about where the market was, what I expected with buyers and sellers coming in the spring, inventory here, all of that stuff. That is a normal market. There are price reductions in a normal market, right? And so you're going to see that stuff.
What I say is, hey, number one, why are you moving? First of all, what's the reason you're moving? How and can we help you do that? So as long as they know the reason, and then also what's the goal? I mean, I think no matter what the market is, the fundamentals of real estate are pretty much the same, which is it better to buy now or later? Now, the thing is that are you going to be here for 6 months or a year? Okay, well, maybe not. Maybe don't buy. Maybe renting is better for you. But if you plan to stay in that home for the next 3 to 5 years at least, I mean, it's highly unlikely you're going to lose money on that home. I mean, there may be a dip next year or maybe even in 2 years, but it's probably going to regain. And yes, it is local. And for Dallas has always been a strong market. They didn't take a huge hit in 2008. They were one of the markets that stayed mostly normal. I mean, it still saw some of its downside. The last 2 years was definitely out of the norm for Dallas as a whole. But again, you just saw the numbers, or I talked about them earlier, still up 20% compared to last year. So even if you bought last year and you're having some buyer's remorse, if you're staying in this home for the next 2 or 3 years, maybe that appreciation slows to 2 or 3% over the next year, just like Jeb said, but you still are probably in a pretty good position. But ideally, you want to stay in a primary residence just for the capital gains exemption, right? For at least 2 years, if you can. Now, if circumstances happen and your aunt passes away and you have to move back and help family, those are things you can never predict. And so, that just comes down to a timing thing. So it's why are you moving? Is it the best choice for your family right now? Are you planning to stay there for the next 3 to 5 years? And then also, I think even, and ultimately, here's what it comes down to as well, is no matter what the market is doing, we just have to find you one home. And so ideally, we have to work to get you the best deal on that home at the right price. Make sure it's not overpriced, you're not overpaying, and you can find a deal. Just like Jeb said, he's searching for property right now. Seasoned real estate investors are buying properties right now because they know you got to just find the deal. And so we look at that for our clients as well. Is it what they're looking for? And then is it a right deal? We look at it more from the deal side, where they may be thinking of it sometimes on the emotional side. We try to stick to the logical side of that and help them see that. But ultimately, if they're going to be there for the next 3 to 5 years, we just don't see Dallas crashing and burning there as well, especially with all the projections of migration and growth and corporations and expansion. And just all those factors show that job economy is as well. All of that just says that if you buy now and you have that house in 3 to 5 years, you're probably still going to be in a better position. So, but people will skewer me for that, right? The comments will say, "Oh, you're just trying to sell people a house." It's like, well, I mean, it's the thing. And we have clients that wanted to wait last year. They just said, "Hey, I don't want to participate," and we said, "That's fine." And now they're coming back to us and saying, "Hey, let's go. We're ready to make that move and we're ready to jump in. We feel like this is the better time for us," which is great. Now, on average, if you look at the numbers, they're paying 20% more. So at the same time, should they have bought last year? Well, ultimately, it came down to their decision, and we'll still find them a deal. That's our goal is to get them that one house.
Yeah, I'm happy to get back to real estate fundamentals, and that's the same thing that I talk to all my clients about. I want to play devil's advocate for a second and talk about housing affordability because it's probably my biggest concern moving forward. The National Association of Realtors it puts out an affordability chart, and we are getting to the point where we're tipping, meaning that if someone's buying a median price home and putting down 20%, they are actually, for the first time, I believe it was last month, under what they should be paying, or over. I'm sorry, I'm probably saying that wrong. The housing affordability has become a big issue in the sense that their monthly payment is becoming a lot more than what it was even 2 years ago. Mm-hmm. So in the state of Florida, it's extremely different when it comes to taxes. So not only did people that bought in the last year, especially in the last year, they paid more money for their houses, 30, 40% more. Their tax rate is going to be extremely different than their neighbor's tax rate if the neighbor owned the house before COVID. So I think my biggest fear for the market is just, we have strict lending standards. They weren't giving loans to people who didn't qualify. However, if anything happens with the job market or people, don't make as much money, then I worry about the affordability of, just their monthly payment.
I mean, a reasonable concern, for sure. I mean, that's what's affecting demand at the moment, right? So, I mean, that's why we've got demand softening so much across the board. It really has to do with affordability more than anything else in the market. I mean, most people out there aren't looking at inflation numbers going, "Oh my God, inflation's at 9%." They're going, how does that affect me? And the monthly payment is clearly a problem. I live in a more affluent market where, yes, it is going to affect people. It is going to limit the number of buyers out there without question. But overall, it's going to remain pretty strong. And I think that's another reason why I think home prices move sideways more so than anything else, is to allow some wages to catch up with the market, to allow maybe even decline in some markets a little bit, just because allow wages to catch up, right? I mean, we know employers at the moment, even though the employment numbers don't necessarily reflect some of this pay. But I mean, I was back home. I don't know if any of you guys know this. I'm from Eastern North Carolina. I'm from a very rural, small town. And when I went back a week ago, and there was a sign I don't know if it was on the side of the road or what it was exactly, but they were hiring school bus drivers for $17.50 an hour in eastern rural podunk, as you said earlier, country town. $17.50 an hour is a substantial amount of pay to live in a town where the average home price or the median home price is probably still in the $100,000 range, right? And so, these employers are paying top dollar for employees because it's hard to find work. So I think with home prices moving sideways, some of these wages catching up, affordability at some point will catch up. Now, is it going to be where it was 20 years ago? Probably not. But I don't know the solution to that. I mean, we're starting to talk about much bigger fundamental problems with wage disparity and just things that are well beyond anything that, I know.
You guys don't want to solve all the economic problems
I'd love
of the
to.
U.S.
I just
right
don't
now?
know that
Let's do that.
that it's possible. It's a lot of it.
If we do, then they should definitely
we
hire
still
us.
have we're doing crazy stuff out there at the moment, like signing more bills into, what are we doing? I mean, we're just spending money. So I don't know. We could talk about different things, but it's anyhow, I digress.
Levi?
Yes, everything Jeb said.
Yeah.
Well, I mean, I tell you what, yes, we could go down a rabbit hole here. I'm completely disappointed in the, what's going on at the higher levels there. But the thing is it's, I don't know. It's hard to say because, 6 months ago, this is something that we talked about with clients. I think a lot of us knew that they were going to, the Fed told us they were going to raise interest rates, and they knew they were going to go in the 6s and 7s. And, we tried to educate at least buyers we were working with to say, look, this is going to reduce your buying power. So, if this is the right time for you, we weren't saying you have to buy right now, but we were saying if this is the right time for you, probably better to lock in that 4 or 5% percentage rate right here. If you want, a $7,500, $125,000 more expensive home. I mean, that was the reality for a lot of people, is that that percentage rate was allowing them to get a more expensive home. Now that we're back down to 5%, and it's again, I think back to where what we thought was normal back in 2019. I mean, that was a good rate. And here's where of course, the Fed, when they dropped it to, high 2s, low 3s, that's an expectation right there. And like Jeb said, if we get back to the 4s, that's the problem, is once you go down that rabbit hole of dropping interest rates, you set that expectation. And now, just like Jeb said as well, is that we have short attention spans. And so now that's what everyone's focused on. Well, it was 2.9, just, 6. Well, we were also in the midst of a pandemic, which had never happened before. And there was 30 million layoffs the year before that. And, like you said, it was supply chain shortages, all these different things that we really hadn't experienced in the world at that time. So, did they take it too far by lowering it? But, at the same time, it definitely spurred quite a bit of activity at the time. But that's the thing, is that, yes, would you have had to fight against multiple offers? Well, clearly lowering the rates down to that rate created that demand as well. But if you were, able to get a home, you're probably still sitting on some pretty good equity, even more equity that it takes some people to build over 5, 6, 7, 8 years. You might have gained that over in the last year.
Sorry, I don't mean to cut you off, but I want to touch on something there regarding first-time home buyers and home affordability in general. So whenever everyone was moving during the pandemic, if they sold a house in any market, pretty much any market in the nation, they had all of the equity that they were getting from their house. And a lot of times it was way more equity, we've already talked about that, than they even thought that they were going to have. So they came and they bought houses. But to enter the market for first-time home buyers has become that much harder. So it's almost like we had the haves, the people who owned a house pre-COVID, and now we have, in the have-nots, the ones who didn't. So as the market balances out, I see it as a great opportunity for the first-time home buyers to enter the market. However, they are dealing with everything being just higher in general. Thoughts?
No, I agree. I mean, it's the people that owned equities, owned housing prior to the pandemic, are the people that got the greatest reward from owning that asset, if you will. Owning a property, there's a reason that it creates generational wealth, and the reason that homeowners are 44 times greater net worth than those of renters is it's real estate, right? So I think that's why we're all here, is we're trying to promote the idea of home ownership. We're not telling you to buy a house, but we want you to know the importance of owning a home and what it allows within a family, stabilization, secure, like all of these different things. It's super, super important in the development of kids and families and all of this stuff. And so, yes, first-time home buyers, there needs to be more things geared towards first-time home buyers. And I know in some markets there are programs and different things. California, we don't have a budget for that sort of thing, so they don't exist. But in other markets, Dallas and some of these other markets, or Texas rather, I know they do. But I think what is going to swing here or change here to allow some of this to catch up is there's going to be loan programs. There's going to be things that change just like the last time. Now, maybe not like the last time, but to allow lower monthly payments. What that's going to be, I don't know. But I can tell you that, they have to address affordability in one way or another. And I don't see home prices going down being the catalyst that gets first-time home buyers in. I believe it's more of a loan catalyst, something that allows them to have a lower monthly payment in some way to be able to buy that property. But I think the bigger problem in my eyes is the larger corporations looking at a lot of these properties, buying them as rental properties in these markets that are your markets, right? They're not buying $800,000, $1 million homes in California. They're buying $200,000 to $500,000 homes in the Sun Belt, in the Texas area. And that takes away inventory, drives up prices, and creates more issues.
Yeah, that was a huge part. I did an episode on that. It was a huge part of our market over the last couple of years. Was it in yours too, Levi?
Yeah, I think that was the number one home buyer this last year. It was corporations.
Yeah, I mean, that might be a good place to start. What are you guys telling your fellow realtors, the ones that you mentor, the ones on your team, as far as how to prepare for a market that isn't as crazy as it was the last couple of years? We all got used to having pipelines of buyers that were just, flowing. What are you telling people now?
Save your money. No, honestly, get back to the basics, right? I think a lot of agents right now forgot, like we kind of mentioned earlier, they forgot what a normal market looked like. They forgot how it, you had to have difficult conversations sometimes with buyers and sellers. You had to talk about price reductions, price improvements, if you will. That's a normal market. And I think it's just a reminder of, hey, look, the world's not falling apart, guys. It's just getting back to what, a market maybe you were in, maybe you weren't, and just kind of bringing back some of those fundamentals. And I think looking at data, like we said, from, 2017, 2019, when nobody was talking about crashes, if you will, or some people were, but not the majority of people, and just saying, hey, look, this is where we were then. This is where we are now. Things are moving back towards that. But look, it was a healthy market then. Things were still moving. That's where we're likely to head.
Yeah, it was so funny because dealing with buyers for the last couple of years, you're kind of like, here's the house, take it or leave it. You don't get to ask for anything. It doesn't matter what it's valued at. If you want it, then they were willing to do whatever. And now all of a sudden buyers have more power. So as an agent who works with buyers and sellers, the conversations I'm having with buyers now are hard conversations to have sometimes, not for me, because I've been doing it for 15 years, but for newer agents who are coming in, and all of a sudden you now have to deal with buyer expectations and, repairs, all sorts of things. It's hard. And then the same thing with sellers and price reductions. These are hard conversations as real estate agents to have with your clients that I don't think we have had to have very much of in the last couple of years. But we will. So everyone buckle up.
No, I was going to say we were able to be sloppy to some extent with regards to, like where we came from in this business. I'll be the first to tell you. I mean, a lot of the things I would always do on property, I didn't have to do it. Right. And now I'm doing it again. Just you're getting back to that type of market. And for me, it's normal. For those outside looking in, they go, well, everything is changing. This isn't good. Well, it was like that for, 10 years prior to. That's what we're, nobody's used to it, but that's really what it is. And so I think, again, it's setting expectations like it is in anything else, whether you're working with a buyer, working with a seller, talking to the market, on YouTube, it's setting expectations. Maybe you're right, maybe you're wrong, but I think putting it out there and giving a direction for people is important.
Yeah, Levi, you have a big team. What are you telling your younger agents?
Oh, get ready. I mean, we deal a lot with buyers, especially out of state and relocation. So I think I'm excited for them. I think there's just going to be more opportunity, and the competition is going to be a little bit less, but it could still be there. But again, we have to find, just like Jeb said, he's saying all the right things today. So it's just a matter of
gold star for Jeb.
Yeah, we always set the expectations. With that had to be done over the last year and a half, because otherwise your buyers were going to be in for it. Now that's kind of flipped. But ultimately, again, they're asking the questions. We're letting them know what's going on. And again, we ask those questions. Why are you moving? Are you planning to be here 3 to 5 years? Is that the ideal time for you? What's the situation? What's right for your family? And then also, what are you looking for in as far as making that move over here? And so the thing is, we used to have those conversations with them, and I think for our team, they've done a great job of navigating the seller's market. And so as we shift more into this, and I just think there's going to be opportunity, and I'm excited for the buyers too. So I think again, it's always better, I believe, to buy now rather than later. And Dallas has a good indication of a strong market moving forward. So, with that, we just got to make it on a case by case basis, really. And that's what we look at. We look at everything case by case with each client and each house.
Yeah. Well, I'll leave it there. Thank you guys so much. I appreciate your time. I know how busy you both are. And this was fun. I learned a lot. I hope everybody else learned a lot. So everybody check out their YouTube channels, and we'll have a link to all of that in the description of the video. And if you guys have any questions, comments, would love to hear them. Go ahead and throw those down there. And if you're not a subscriber to Melanie Loves Tampa Bay, I would really love for you to hit that subscribe button. And that's it for now. With love, Melanie.